everyone, Darko here, lead coach, Coach's Corner long-term trading service. For this week's video, I will be talking about Bitcoin. I'm not trading Bitcoin myself, but I had a request from several members and also social media followers that want me to have a deeper look on Bitcoin. Before I start, I just want to let you know I've been sick the entire weekend. I'm actually recording this on Sunday evening. Or Sunday afternoon here in Sweden. So if nothing serious. I've been having coughing and sneezing, and have some pain in my throat. And so if I need to pause the recording or if I sound a bit strange, then you know why. So for Bitcoin, let's just do this. I will do like a complete top down, but also sharing the thinking process. As you all know, I'm a position trader and swing trader. That's what I do on Forex. I analyze commodities and indices and cryptocurrencies, also stocks by request. I always start with the with the yearly chart to see for the bigger picture. We never trade the yearly chart, the yearly necklines. So we all agree that this was a bearish candle action, and we have specific rules for how to identify a bearish candle action. This candle closed clearly below the 50% fib. Okay, and this candle in here, well, I don't even need to draw a fib or anything. This is 100% bearish candle action. Okay, and there was no correction. Like let me just grab my pen for you so you understand what I mean. So I would say 90% of the candles, they have wicks on both ends. Okay, it varies. Sometimes the wicks are longer, sometimes they are smaller. Okay, but it's very seldom we don't have any wicks. Okay, and that happens. There is nothing like never ever. Just like the vast majority of the candles have wicks on both ends. So we closed here and we opened, and from the start of the year we have been heading up. And obviously there are some fundamental stops going on that affects cryptocurrency as well. I'm not covering those because I'm a newbie when it comes to fundamental analysis, so I leave that for someone else. So what I think on a yearly chart, that at some point we will be touching this level. Okay, so why did we bounce from here? To see that, we have to go to the weekly chart. Okay, because I always like, hey, this was a level that I was watching and told the members and clients that this is a level to watch when price retraces back into this level. There were several trading opportunities in here. Okay, so price comes down, hits this level. Okay, we make a lower high, and we came down, touched this level. For every time we touch this level, we are making a lower high. So breaching this level was like not a rocket science, right? So if we breach this level, where's the next level of support? Like if you go candle by candles, could this be a level? Yes. Well, let's mark that level and see if price reacts from that level as well. Perfectly, right? So, and now this is heading up. So if I move this again to the first level of support, you see that we almost touched that level, not perfectly, and we are heading up. Okay, so if we are heading up, where are we heading up to? Where is the first level of resistance that makes sense to you on this time frame, which is a weekly chart? Well, you have a level of support. We breached that level. Okay, then support became resistance. We went down to a level of support. Okay, we made lower highs. Okay, we broke that range to the next level of support, and it was, I would say this would have been, that's like what 8 times out of 10 happens. We continue in that direction, and that's what I thought will be happening until we hit the next level of support. And that level is also the yearly level, and then we will be doing something like this. But that's the thing with trading. You don't know, because I would say 8 times out of 10 when you have that breakout from that range, price usually retests that level and drops. In this specific case, if I go to my daily chart, okay, we clearly see that we already had that retest. Okay, this is the same thing that I was drawing on a weekly chart is on a daily chart. Okay, so price came down, we broke this, we breached that area, came up, retested that area for a perfect short, and then 8 times out of 10 price will be doing, once we break this level, lower high and a lower low. That's 8 times out of 10, but price failed to make a lower low. Okay, that should have been a warning sign. This is still the daily chart. I'm not talking about the tick chart or 5-minute chart or 15-minute chart, not even an hourly chart. This is a daily chart. So we failed. But you might say, but Darko, how do you know we failed? Price could very well do something like this. Well, yeah, sure. We don't know until price is heading up toward this level again. Now this, by the time we are up in here, definitely should be a warning sign. Okay, and the most logic would have been to price to come down into this level for breach, break, background space and retest and go up. And obviously there were some fundamental stuff going on around this level in here, and price went up. Okay, so what's here, what do you do from here? Okay, and by the way, like if I mark this level in here, this yearly level, this yearly level is also this monthly neckline. So if you are trading Bitcoin, this level should be on your radar. And what do? You just long? I would say no. Wait for price to hit this level and wait for a pattern of your preference. I'm trading, ACAT, set and forgets, and swing break rotations. You might be trading Gartley and bats and butterflies, or supply and demand, whatever you are trading. Okay, we all see different things easily. Okay, so for now, price is clearly breaking this level to the upside. Let's go back to the weekly chart. Okay, so the most logic would be that there are like two options. We either come down, retest this level for a potential long opportunity for further upside, or price will be just heading up into this level of resistance. And now we need to see if price is providing us a shorting opportunity in here. If we breach this level, just give me 1 sec, I need to cough. Jeez, I hate to be sick. I usually not been sick like maybe once every 5, 6, 7 years. Now for the past month or two I've been sick twice. Jeez, getting sensitive. So this is the level of resistance. Sure, if we breach this level, the next level would be in here, right? Okay, so that's on a weekly chart that you should be watching. So now you have 2 levels, actually three levels. This level for a retest, an entry long, and I will be more specific shortly. This is the level of resistance, the first level of resistance. This is the second level of resistance. Okay, if I go to my daily chart, well, this level makes sense. The first level is, I would say this is a level of resistance in here. I wouldn't be combining too many time frames for support and resistance. As a swing trader and position trader, monthly and weekly, that's it. But most people are like day trading or scalping, then you need to use proper time frame. The worst thing you could do is to watch yearly, monthly, weekly, daily, 4 hour, hourly, 15-minute, and then you just like, geez, 3 of them is down, 3 of them is up, 2 of them is sideways, and oh geez, I'm confused. No wonder you're confused. So you have to stick to that time frame combinations. Okay, so for swing trading and position trading, let's just say that you are only position trading, nothing else, then yearly, monthly, yearly, monthly, and for your longer time frame, your daily is your entry time frame. For swing trading, you watch yearly, monthly, weekly, and the 4 hour is your entry time frame. That's it. You don't watch anything else. And sometimes, like I do both swing trading and position trading. Then I have the time frames that I'm showing you. The lower part of the charts, let me just grab my pen for you. Okay, this part in here is, this one in here, the yearly is only for the bigger picture, nothing else. Monthly, weekly is for trend, support and resistance. Okay, and the daily and the 4 hour is only my entry time frame. I don't look for support and resistance on daily and 4 hour. Okay, so because the level I showed you is on a weekly chart, there is only one time frame to watch, which is 2 time frames below the 4 hour time frame. Okay, so if the 4 hour charts comes down into this level, you are looking for a long opportunity. The only problem here, you don't have any natural stop. This is like an iffy natural stop. The clear natural stop is down in here, so therefore you have to wait for something. So once price hits this level, you might get a set and forget, you might get a swing break rotation. Okay, then you will be able to trade more contracts or lots, because now you have a smaller stop loss. And if price goes up, touches that level of resistance, now you are looking for a potential shorting opportunity. Okay, that's it. If you want me to cover any other, could be Forex, could be commodities, indices, stocks, cryptocurrencies, type in the comment below. Like if you want me to analyze gold for you, or maybe oil, or maybe you have any stocks of your preference. It needs to be on TradingView, so let me know the approvations for it on TradingView, whatever you want me to cover. I usually don't read the comments. Sometimes I do, sometimes I not on social media. So this time I will definitely check which currencies or whatever trading instrument you want me to analyze for next weekend, that I will be recording. Then it will be posted some days after. I will be doing that for you. If you like this video, make sure you hit the like button and support the community, and I will make a new video for you. Thank you so much for listening, and I wish you a fantastic trading week. Cheers.